Hi guys, it's Stock Curry, and before we get into today's stock picks, I just want to give you a few updates on the channel as well as the markets. First of all, regarding the channel, unfortunately a lot of the videos and things that I wanted to get out for you guys this month are getting delayed. I've had a lot of appointments, and then the other thing is my boys have been sick, and then now the whole entire school is on lockdown for 2 weeks. Well, not lockdown, they're just shut down for 2 weeks due to a bunch of people, I guess, got positive. It's just really weird times, you know? It's with, if my kids cough, if they cough at school, they get sent home for 10 days unless they get a negative. I mean, it's crazy. They're kids, right? They're going to get sick all the time. So it has just been really difficult to get anything done with my boys being home all day, and then I've got to let them do full-time schoolwork and help them out with all that while I'm also trying to watch videos and get these videos produced for you guys. And it's just really slowed down the progress that I was making on things like my options training video and things like that. So unfortunately, it looks like the options video won't be out till next month. But I am working on it, and hopefully I can get that guys out to you, pretty soon here. The other thing I want to say is, I want you guys to enjoy trading and enjoy this channel. Now, investing should be boring, right? You should just be dollar cost averaging in, taking a little bit of every paycheck and putting it into your long-term stocks, your dividend stocks, growth stocks, value stocks, things like that. That should be boring, but trading should be fun. Trading is where we're in and out and just having a lot of fun. By the way, the real reason that you guys should have most of your portfolio in investments and not trades is because when it comes to investments, when you hold for more than a year, your tax rate is like half of what it is on a short-term trade. So, you might get charged 15% tax on a long-term investment that you hold a stock for a year or longer, and you might get charged like 30% or more on a short-term investment. So I really strongly recommend that most of your trades are going to be long-term because you'll make a lot more money on those than you will with your short-term trading. Short-term trading is great for some extra little bits of money or whatever, and also just to have some fun. But ultimately, the profits you make from short-term trading, I recommend you take some of those and move them into your long-term investments because the taxes are just going to eat you alive in your short-term trades. But they are fun. That's honestly one of the reasons that I never really fit in the investment banking world is because I had too much fun. I know it sounds crazy, right? But I don't know about everybody else, but I know our account, we had a $4 trillion portfolio. And so people were really on edge. They didn't really want to make mistakes, right? Like, I remember one of my coworkers fat fingered a wire, and he was supposed to send $34 million to somebody, and fat fingered it, sent $43 million, and we were out like $9 million overnight. And I mean, to us, it really wasn't a huge deal, right? We just read a report for FINRA, and that was that. But seriously, everybody was really on edge. They wanted to make sure everything was correct. It was really serious because you're dealing with a ton of money. But here, we're just having fun. I mean, I know this is a ton of money to you guys. You guys have like $100 invested or $1,000, and it's like all the money you've got in your investments. It's a big deal, and it is a big deal. But I want you guys to have fun with it. So that's why on the photo for the channel, I went with the smiling, happy, fun-loving Stock Curry because let's face it, that's really what we end up doing here. So enough of the channel updates. Let's talk about a little bit of the market. Obviously, I don't really have a lot of updates or news for you today. Not a lot is happening, but the Fed is speaking later this week. We have some economic reports coming out later this week. So there are some opportunities and changes for some major market moves. Now, historically, when the Fed opens their mouth, the market tanks. So there's some possibility for some red days tomorrow, Wednesday, Thursday. We'll have to keep our eyes on that. But overall, the trend in high growth stocks is up. And it is looking strong. It's looking like a good, strong upward momentum. So I like to see that. I love to see that. We may get a little bit of a pullback for a day or two, but overall the trend is up. And so it really looks good. Like we've got a nice bottom about a week ago, and now we're starting to go back up. The last 5 days have been phenomenal for high growth stocks. In fact, my portfolios overall today were down a little over 1%, but my high growth portfolio was up like 0.2%. So it's doing well. High growth stocks are doing well. You guys should be happy. You guys should be excited. Well, we're all about to make some good money here. All right. let's get into the stock picks. For those of you guys who are new to this channel, my name is Stock Curry. I used to work as an analyst for some large investment banks, and now I analyze stock picks on YouTube. What I do is I watch YouTube videos all day long. I spend hours every single day watching YouTube videos, and then I give you my analysis on all of the stock picks from the top 10 YouTubers. I give you both the cliff notes from the top 10 YouTubers as well as my analysis on their stock picks. If any stock I talk about today piques your interest, make sure you listen to who I say talked about that stock and then go watch their video to get the full details on what they said. Now, all I ask for putting all of this together for you guys is that you hit that like button, subscribe, and click the bell icon, and then click all so that you can get notified when I release my next video. In fact, I'll give you 5 seconds to do that right now. All right, before we get into today's stock picks, I just want to remind everyone that I am not a financial advisor and none of the YouTubers I follow are financial advisors either. Today's video is strictly for entertainment purposes only. For those of you who are wondering, you are currently looking at the Webull desktop app. Webull is the app that I use for my trading, and it is also the app that I use in all of my videos. All right, let's get into today's stock picks. First up is Bitcoin. ZipTrader said BTC is becoming more and more legitimate every day. Landry Restaurants just announced that they will start accepting BTC as payment. ZipTrader also let us know that Elon Musk said TSLA sold their BTC investment for a profit. Next up is Ethereum. Stockmo said he is basing his crypto purchases now on how much a coin is being used and adapted. Stockmo let us know that as of Q3 2020, there were 2,300 developers working on the Ethereum network, but only 400 developers working on Bitcoin. So it looks like ETH is getting much more support than BTC. And that is why Stockmo is putting 75% of his cryptocurrency portfolio in ETH. Stockmo recommends dollar cost averaging into cryptocurrencies. He recommends continuously buying a little bit of crypto every year until you retire. Next up is AMC. This is AMC Movie Theaters. Trace Trades let us know that AMC redacted their proposal to authorize an additional 500 million shares. That's great. But AMC stocks still dropped today. Why? Because AMC also announced today that they have decided to use their remaining 43 million shares to do a share offering. Details of any share offering have not been announced yet, but ultimately this isn't really news since the CEO already said they plan to offer those 43 million shares. Now, taking another look at the technicals, AMC looks quite bullish. The chart is trading above all of the EMAs, the RSI is rising, and the MACD is rising. As I've said before, I do not expect a short squeeze on AMC. Technically, AMC looks good in the short term. Fundamentally, AMC is expensive for a long-term hold. Next up is ARDX. This is ARDX. They're a pharmaceutical company. Keenan Grace reminded us that ARDX has a potential FDA approval coming up on April 29th. He also reminded us to buy the hype and sell the news. Since the news is coming out on Thursday, Keenan Grace recommends either selling ARDX on Wednesday, if you're currently holding it, or putting a trailing stop loss in ARDX. Just keep in mind that trailing stop losses don't work during pre-market and after hours, so you might want to set a normal stop loss in ARDX instead. Next up is BNGO. This is Bionanogenomics. As ZipTrader predicted yesterday, the steam ran out of the BNGO run-up. But ZipTrader did say that a major catalyst could cause BNGO's run-up to continue, and Keenan Grace let us know that BNGO came out today and said that they are forecasting that the market opportunity for their Sapphire device could be in the region of $2.6 to $3.8 billion. Keenan Grace also let us know that large institutions have been slowly and consistently buying millions of dollars worth of BNGO. Chris Hain gave his $7 buy-enter price. It's been a while since I updated my price targets on BNGO, so let me give you a new buy-enter price of $8, an ideal buy-in price of $6.75, and a new stop-loss price of $5. Regarding a price target, let's take a look at tip ranks. The average analyst's one-year price target is $13.92, which represents a 97% upside from Tuesday's closing price. Next up is CCIV. This is a SPAC and they're merging with Lucid Motors. Lucid Motors is an American EV company and a competitor to Tesla. The merger is supposed to happen sometime between April and June of this year. Keenan Grace let us know that an ambulance-chasing law firm is filing a class action lawsuit against CCIV. Now, this is nothing new. Most SPACs either already have been or are about to be sued. Most of these lawsuits end up getting dismissed, but every once in a while, the law firm wins a major settlement. It's kind of like playing penny stocks or pharmaceutical stocks. You just throw a large net and hope you catch one or two big fish. Regardless, large institutions are not phased, and they continue to buy more CCIV. I don't think you should be phased either. The announcement of a class action lawsuit can send a stock down, but in the case of CCIV, the stock was already beat down, so there ended up being very little effect on the stock price. Next up is GNOG. This is Golden Nugget Online Gaming. Chris Sain reiterated his $30 price target on GNOG. Chris Sain said that he felt like GNOG would start waking up at the end of May. GNOG remains in consolidation and is forming a descending triangle. Now normally, a descending triangle is a bearish pattern where a stock will continue to consolidate towards the corner of the channel and then break to the downside. The corner of the triangle is right at the end of May or beginning of June, so that lines up with when Chris Sain thinks a breakout will occur. Now I said that normally a descending triangle is bearish. However, what I've been seeing over the past couple of weeks is that these stocks that have been beat down and were forming descending triangles have actually been breaking out to the upside. So all of that said, for GNOG, I agree with Chris saying that GNOG will wake up and start breaking out to the upside starting at the end of May or early June. There are two ways to play GNOG that I think would be profitable. The first is to use this consolidation period during the month of May to start buying shares in preparation for a run-up in June. The second is to wait for GNOG to drop down to around $13.50. And then buy either a January 2022 or January 2023 call option. The price difference isn't that much between the 2022 and 2023 leap options. So in this case, I would prefer a 2023 call option. Next up is NIO. This is NIO. They're a Chinese EV manufacturer. StockMo alerted us that NIO had gone up for 7 straight days in a row prior to today, which is very bullish. Technically, it does look like NIO might have a small pullback, probably to the 10 or 21-day EMAs, to around $39.50 before continuing its upward movement. StockMo reiterated his $100 price prediction by the end of 2022. StockMo has a January 2023 leap option on NIO. StockMo and the Traveling Trader also hold NIO stock, and I also hold NIO in my long-term growth portfolio. StockMo also let us know that NIO reports earnings on Thursday after the close. The Traveling Trader also reviewed NIO today and discussed how to trade the upcoming earnings. The Traveling Trader does not expect NIO to jump after earnings, but he also does not expect it to drop that much. He likes an Iron Condor options play on NIO. This is the same play the Traveling Trader made on TSLA, which he just closed for a 60% profit. The Traveling Trader did say that NIO might go up next week after earnings, just with the overall EV rebound that we are seeing. Therefore, I want to introduce you to a new option strategy called a vertical spread. A vertical spread is when you buy and sell a call or put. The two calls or two puts that you trade are one strike away from each other. For example, on NIO, we might do the May 21st $40.50/$41 vertical spread. On the call side, we would be buying the $40.50 call and we would be selling the $41 call. What that does is limit our risk to the difference in strike price minus the profit from selling the option. If we are in the money, we get to keep the profits from selling the $41 call minus the cost of buying the $40.50 call. In this case, the difference is 28 cents. And since options are contracts for 100 shares, that means our maximum profit would be 28 cents times 100 or $28. If the option finishes out of the money, we would lose the difference in price on the options, which in this case is 50 cents. But we get to keep the profit from selling the options, which was 28 cents. So 50 cents minus 28 cents equals 22 cents. That means our max loss would be 28 cents. Again, multiply times 100, and that gives you a maximum loss of $22. With this play, so long as NIO closes at or above $40.72 on May 21st, we will make money. Now, why would we do a vertical spread instead of just buying a call option? Because with any stock, the stock can do one of 5 things. It can either go down a lot, it can go down a little, it can trade flat, it can go up a little, or it can go up a lot. Remember that our break-even price on this option is $40.72, but the current trading price is $41.21. What that means is that on a vertical spread, we will make money in 4 out of those 5 situations. We will make money if the stock goes down a little, we'll make money if the stock trades flat, we'll make money if the stock goes up a little, and we'll make money if the stock goes up a lot. The only way we lose money on this option is if the stock goes down a lot. Now, if we had chosen not to do this vertical spread with this $40.72 break-even price, and instead we had chosen to do a single leg option, let's just say we bought the May 21st $40.50 call, but we chose not to sell the $41 call, then our break-even price would be all the way up to $43.85. And again, the stock is only trading at $41.21. What that means is that we only make money in one scenario. We lose money if the stock goes down a lot. We lose money if the stock goes down a little. We lose money if the stock trades flat. We lose money if the stock goes up a little. The only way we make money with a single leg option is if the stock goes up a lot. So as you can see, buying an NIO call by itself means we only make money in 1 out of 5 scenarios. But by doing a vertical spread, we make money in 4 out of 5 scenarios. And that is what makes options trading so powerful. Trading multi-leg options greatly increases your chances of becoming profitable. But the warning is that trading a single leg option greatly reduces your chances of becoming profitable. So hopefully now you can see the power of multi-leg options and the risk of trading single leg options, and why I really do not like trading single leg options outside of using them for day trades and for very long-term holds known as leaps. Now, I know you guys have been waiting for my options trading video, and I do hope to get that put together for you guys soon. Unfortunately, I've been delayed with my boy's school being shut down for 2 weeks, so my new ETA on the options trading video is sometime in the middle of May. Next up is SNAP, and oh snap, it's Snapchat. Chris Sain is thinking about buying a put option on SNAP. He said he's going to give guidance on this options play in his next video, so I'm going to wait until Chris Sain releases that guidance before discussing this. I just wanted to let you know that he mentioned it. My guess is that he's seeing the channel right here and he probably wants to play the downtrend, but again, we'll wait until he releases his video before we get into this. Next up is TSLA. This is Tesla. They're an American EV manufacturer. StockMo explained why TSLA went down on Tuesday despite beating earnings. The reason is because TSLA had high expectations. People expected TSLA to beat earnings. So the fact that they only beat earnings and did not blow earnings out of the water caused the price to go down. StockMo also talked about the earnings call a little bit. On the earnings call, TSLA said that they expected supply chain issues to continue into Q2 and possibly Q3 of this year. Also, last quarter, 70% of all EVs sold in the United States were Teslas. That is lower than the 79% from 2020. So it looks like TSLA is slowly losing market share. But that does not mean that they are losing sales. In fact, TSLA reported a 74% year-over-year increase in revenue. And as StockMo pointed out, there are a lot of opportunities for TSLA beyond just cars. They have their autonomous driving technology, which could lead to robo-taxis, their solar power energy side of the business, and much more. Finally, we have TTCF. This is Tattooed Chef. They are a plant-based foods company and a competitor to Beyond Meat. Chris Sain said TTCF is about to explode because they are starting to advertise. The chart is looking quite bullish on TTCF right now. The candles have 2 closes above the 200-day EMA, the RSI is rising, and the MACD just formed a golden cross. I have been quite bearish on TTCF over the past few months, while everybody else was pumping it. But technically, the chart looks good right now. Also, they reported 2020 year-end earnings on April 15th. And they reported a really good profit with earnings per share or EPS of 1.69. At Tuesday's closing price of $17.99, that gives them a price to earnings ratio or PE ratio of only 10.64. That means that financially, TTCF is really cheap right now. So what does that mean for my analysis? It means Stock Curry is now a bull on TTCF. I will rate TTCF a strong buy with a $25 price target. Alright, I hope you enjoyed this video and got a lot out of it. Comment down below what your favorite stock pick is for Wednesday. And if you want to get some free stocks, sign up for Webull using my link in the description below. When you sign up and deposit just $100, Webull's going to send you 2 free stocks worth up to $1,850. They're also going to give me 1 free stock, so it helps you out and it also helps the channel out. Finally, remember to hit that like button, subscribe, and click the bell icon if you haven't already. I hope you have a lot of success trading, and I will see you tomorrow.